All right. Well, it's 20 to 8 UK time. So let's kick off, guys. So most of you know myself. My name is Mark Austin. I work alongside Cameron and we head up magnetic trading. But for those of you that don't, we'll just do a very brief introduction in a second. Tonight or today, if you're in the UK or if you're in Europe, we're going to be talking to you about market function, the fourth pillar in trading. So many people are familiar with technical analysis and fundamental analysis, but there is another way of making money in the markets, which is far easier and far predictable and better results. We're going to teach you about that. We're going to give you some examples of market function. We're going to go over, in my almost 15 years now running this trading service, why do most traders struggle? So we're going to go over those 3 points. We're going to be doing some live trading. So just before the UK market opens, we're going to be looking at the charts and looking at the best trade to take today, if there is one. And we're going to be going over the expiry trade. This has an incredibly high win rate over the last 7 years trading this with our clients. It sets up once a month. It's going to be on Friday. We're going to give you some information about that as well. So very quickly, who are we? We are an Australian company based and we are financially regulated. We have an ASIC license. As I said, we're founded by myself, Mark Austin, and Cameron. Cameron specializes in different markets to myself. I'm predominantly a UK market specialist. Cameron's Australia, US, and German market specialist. We've got over a combined 30 years of trading experience now, and we've been helping clients just like you trade the markets for well over a decade now. We do specialize predominantly on indexes, although we do look at other investment opportunities these days as well. We've been featured on many programs over the years and articles. This is Cameron on Sky News talking about magnetic trading and our success. And you can go on the internet and you'll see quite a bit of information about us. Now, if you don't have our free Telegram app, it's totally free. I'm going to post in the link now. I highly recommend that you get this downloaded on your phone. Of course, you need to download Telegram first, and then you can put the link. I've just put it into the webinar chat. You can copy and paste that, and you can add Telegram. If you've got any issues, you can always email support. So support@magnetictrading.com. But there shouldn't be any issues. We do find there's the odd person that can't get it downloaded for some reason. I don't know what that is. Maybe they haven't installed Telegram first. But yes, install Telegram first, and then you can join the channel just by clicking that link, and you'll get access to all sorts of free goodies within that channel. All right, so I want to go over some kind of 3 common mistakes that I've noticed over a decade of working with clients and seeing what they do behind the scenes. And really, the top 3 I'm finding are that clients, or I should say the retail market are getting into trades way too late. And they're relying on technical indicators. Now, technical indicators are pushed out by brokers. You'll see all sorts of tutorial lessons on YouTube. You'll see all so-called gurus on the internet with their Lamborghini pictures and their, spilling money out of the toilet, or whatever they do these days on Instagram. And it will all be based on mumbo jumbo, and predominantly that's technical analysis. And my feeling on technical analysis and these technical indicators is that if they're so good, then why are so many people struggling with trading? The reason is most of these technical indicators are, as I said, mumbo jumbo. So that's a big reason. We'll give you a solution to this as well as this presentation unfolds. The smart money, look, it gets in early, guys. Certainly here at Magnetic Trading, we're not relying on technical indicators to get in. We're actually looking to get in when the retail trader gets stopped out. Also, I find that a lot of people use stops incorrectly. So mostly the retail market will place their stops in obvious areas and the market makers and the market will just go and hunt for these areas to maximize trade, stop people out, and then off it goes. And most of the time, people have actually called the direction correctly. It's just they're putting and using stops incorrectly. I'm not going to touch on stops too much, but there is a very good free video on the Telegram app which talks about acceptance and how to use acceptance as a different type of stop to get out of the market when you're wrong. Because you've got to use a stop. I'm not saying not to use a stop, but you've got to use it correctly. Otherwise, you're just going to be spinning your wheels all the time. Third reason is very obvious. You'll see this probably said by many people, and it's not running trade. So getting into a trade and snapping up the money very quickly and not allowing the profit to run. So what do we do about not getting in too late? Well, what we do here is magnetic trading is we use the blueprint liquidity grabs. So what we're looking here is literally we wait for areas in the market where the retail market are getting stopped out. As soon as they get stopped out, and again, we know where they're going to get stopped out because we're looking for obvious areas where they're going to put their stops. So we wait for them to get stopped out. Has to be at a key level, can't just be random areas in the market, but it must be a key level in the market. And then we'll look for a reason to buy. So we're literally taking the opposite side of the trade of losing traders. Now, this represents a very low risk, high reward form of trading, and it works extremely well. So this is a trade that we took just last week. And again, you can see on the picture there, I'm going to expand it in a second, but we literally waited for an area on the 4-hour chart, which tied in with a key level. We waited for people to get stopped out just below there, and then we took the reversal trade. So let's just see what that looked like. This is a 4-hour chart. It was actually this candlestick here. We waited for it to break because people had their stop below here. Forget this side of the chart because this hadn't happened yet, but we were trading and people would have put their stop there. This represented a very good value buy. We literally waited for the stops to go off and then we bought just above this line. So you'll see no technical indicators, waiting for people to get stopped, not a big stop required at this point, and very good high reward in these circumstances. There's another example here as well. This line down here at the bottom is again a very key level where to buy, and it's where people put their stops. We just waited. I mean, this actually did it on Friday. I didn't take this trade on Friday because it was too late for me in Asia. And also, I don't like taking trades in the afternoon of the FTSE session on a Friday because I don't want to be holding it over the weekend. But again, had this happened on a normal weekday in the morning, this would have been a very good trade as well. So again, just taking out a very key level that we'd identified, stops everyone out, and then off it goes again. So we can talk about this more. I'll take some questions at the end. But liquidity grabs are great for short-term trading. And yeah, you're just taking the opposite of everyone that is losing out in the market. This is just a client that messaged me on that particular trade. Again, getting in really early on this guy. So 73.76, only a stop of 20 points, and then riding it all the way up to above 7,400. So let's just quickly touch on the traditional forms of trading again. So we've talked about technical analysis. I'm sure everyone in this room knows about technical analysis because everyone on the internet is talking about technical analysis, and you'll find so many gurus and courses and one-day seminars that will entice you and teach you about technical analysis. For me, that is by no means good enough to make money in this profession. You might as well go and get another job. There's also fundamental analysis. It has its place, certainly. But again, this approach is flawed and won't make you consistent money if you're just using that. Then there's price action. I do know traders that are highly skilled and can literally make money just on price action, scalping, we call it, getting into the market very aggressively in very tight stops, and they can make money. But it's the very few. I would say 0.1% of people out there can master just very short-term price action, because you've got to have a very strong mind, and you've got to be able to get stopped out multiple times, flip the switch, go back in again and make up your loss, be able to run trades. It's a very stressful form of trading, and it's, yeah, you can either do it or you can't. And as I said, most people can't just trade on price action. So what is market function then? Well, we like to use market function here at Magnetic Trading. We've talked about liquidity grabs, but there's 9 high probability trades that we use here at Magnetic Trading, and they are literally tied to why the markets exist in the first place. So it kind of made sense in the early days to form a strategy with why markets exist. So, I mean, the question is there on the screen, and it is, what's the true function of the market? Maybe have a little think about that. Why do markets exist in the first place? Well, they're there to buy it. They're there to match up buyers and sellers. That's what the markets are there for. So what we're doing is we're looking for areas where no buyers and sellers have been matched up on a very short-term basis, and we're taking advantage of this. Okay, so if there's an area in the market where no buyers and sellers have been matched up, we will identify that and we'll use that to our advantage to trade. We have, as I said, we've got 9 trades based on market function and market function events that have extremely high win rates. So let's just go for some examples. Well, we've got the, first trading day of a month on the DAX. It happens on other markets as well, but that's when pension money comes into the market. So it gives us a very good reason to buy the market at a particular time on the German exchange. Over multiple years, it has a win rate over 70%, and the risk reward is phenomenal. So you're risking less, but you're making a lot more. Then we've got dividend day. So this is a day when the FTSE has a high dividend. And what we do on this day is we look to buy the FTSE 100, because if it's got a dividend over 10, there's a good buying bias and there's good reason to buy the FTSE. Now, it just so happens tomorrow, the FTSE has a dividend of 14 points. So I can bet you $1 that when you look at the FTSE tomorrow, you're going to see some buying come in the morning session. So do look out for that tomorrow. If you're on Telegram, I might give you a bit of a trade tomorrow as well, but make sure you download Telegram and I'll manage a bit of that trade for you as a bonus. So that's Divi Day. And of course, there's, other examples are seasonal buying. We're actually in a time of the year where we're expecting a bit of bullishness. So what I'll do is I will talk to you. I'll show you a very interesting stat in a minute on the FTSE 100. And then there's expiry, which I'm going to talk to you about in a second. I'm having to race forward because the markets will open soon, and I do want to quickly look at them with you. So look at this FTSE stat. In the last 31 years, yes, that's 31 years, the FTSE ended the year higher than the October low 29 times, guys. That's a pretty good win rate, isn't it? It's a pretty good statistic to know. So whatever the October low is, we'll go and have a look at that in a second, but there's a plus 80%, I think it's 88% actually, this is, that the FTSE is going to close the year higher than the October low. So these are all the, the largest profit was 1,233 pips. And as I said, the losing years, which were, not many, in 2007, it only lost 2 pips. And in 2018, well, we all know 2018, if you've been around long enough, the big financial crash, that lost 211 pips. So not massive amounts of loss, even in, the devastating 2018. So again, because of that, I've got a bit of a bullish bias on the FTSE at the moment. So I'm really looking to buy at the moment based on this statistic. So again, you could say that this is market function as well, because it's, again, we're looking at something broader than just technical analysis and fundamental analysis. I've talked about the dividend tomorrow. Again, this is a bullish influence on the FTSE 100. So we will be looking to buy on the FTSE tomorrow on this particular day. All right, let's now quickly have a look at the market. I'm just going to change my screen. So this is a cash market chart. So it's not a broker chart. I don't do my analysis on a broker chart. So if you've got a broker like IG Index or Go Markets or Capital Spreads or whatever you're using, Pepperstone, I never do analysis on a broker chart because I want to do my analysis when the market actually officially opens and closes. You know, in between, it's just noise. And I don't want to be looking at levels outside of actual market action. So what we're looking at here is we've got some very key lines on the chart. These represent very important areas in the market where we expect buys to come in or keeps the market negative as well. So you'll notice that 7,328 just down here, that was the Friday. That was the Friday move. It just took stops below there. And then we've rallied really, really hard. And then this blue line here is 74.10. Now, very interesting. We're actually opening at, we're trading at 74.10 now. So, and given we've got the dividend tomorrow, and seasonally, we're looking at buys now in the last 6 weeks of the year because of that October low, then today we're probably going to be looking at a buy if we get some sort of acceptance above 74.10. Now, just an FYI, let's just look at the October lows. So yeah, here's the October low here. So just make a note of this. Remember that 88% stat I've just given you, 72.79. So there is an incredibly high result that we're going to be closing the end of the year above that level, guys. So you could say you want to really put your stops, you need to give it a bit of room just in case it just clip that level and move back up again. But for me, I would be looking at a decent size stop below here. I use the 5-day average true range, which is the average move of the FTSE over the last 5 days. So what I would do is I'd put my stop 5-day ATR below here. And again, that's a totally different random stop than most people will be using. And I want to be using something totally different. I don't want to be using what 95% of people are doing. I want to be doing what the top traders are doing. So that's why I'm not going to put my stop 2 points below here, which intuitively, that's where you think, oh, let's just put my stop there, market. It makes sense. What makes sense is in the market is often the wrong thing to do. So that's a little bit of a takeaway that you can do. And as I said, today could be a day where, you do actually want to start looking to buy the FTSE with a decent size stop below the October lows and run it into the year end and see how much money you make and let me know. Give me an email end of the year about how much money you've made on that one. So we're going to watch the market open. And so let me just change this screen, and you can have your broker chart up in case I call a trade out. But let's just see what's going to happen on the markets. So we're trading around 74.17 at the moment. So I have a fair idea of what I want to do today in terms of a trade, but let's just see. All right, we have actually opened. I'm just going to try and get another screen up for you so you can watch this one. Yeah, that's a pretty bullish. That's a good open on the FTSE. All right, let me get the screen up for you. All right, look at that, guys. Right. So remember what I just said at the open about 74.10. 74.10 here, guys. That was a really important level. Well, we've opened above that and we've seen a nice big buy-in. So this for me is looking very good on FTSE now. And this would really supports to get long in the market today. If I want to watch the first 5 minutes, but really if we break the 5-minute bar up, I would get long on the FTSE. And to be safe, I'd put our stop below 7,300. So yes, it's going to be a bit of a bigger stop here. But where can this market go? Well, let's just have a quick look. I have a good idea of where this is going to go. Right. Well, look on the chart, guys. I mean, really, this has got a nice clear run up to 75.70. So, you know, as I said, we have seen some false breaks out, but I like that move, that liquidity grab on Friday. So, and with the dividend tomorrow supporting buys, I see this going higher. So that's what I'd be gunning for, guys, is further movements up towards 75.70 if we break the 5-minute bar high up today. So the opening 5-minute bar, if we open, if that breaks, you can get long with stops. I would put it 20 points below this swing low. So below 7,300, just again, we always want to put our stop a little bit different to everyone else. And we'll be looking for moves up here. The other thing you could do as well is you could look for pullbacks. So if you don't want such a big stop on this one, what you could do is you could buy pullbacks on the FTSE 100. So, I mean, that's just something, you know, which is okay to do. What I mean by a pullback is, you know, it's like a Fibonacci. I don't know if you know Fibonacci retracements, but I'd be looking, I'd basically measure, get the retracement tool. Again, I'm not a big fan of Fibonacci, but I'm just giving you an idea of where you could potentially look for a retracement, you know, if we break the highs today. So, you know, 73.91 down towards there. I mean, really all the way down to 73.60. There's an unfilled gap there, but that would be good as well. 23% as well could be looked at. So there's various options to buy a pullback, but as I said, I'd have your ultimate stop below 7,300. But we're getting a little bit ahead of ourselves because we haven't broken this bar up yet. So this is acceptance. So acceptance basically it can be used as a stop method, but it can also be used as an entry into the market. So what we're looking for is we're looking for a full 5-minute bar to close body and wick above 74.10. 74.10 is here. We can see this bar is completely above 74.10 at the moment. So if this breaks by 2 points to the upside, we have acceptance, which creates a buy signal. What does acceptance mean? It means the market really is happy to trade above a current level instead of a popular known term or terminology called a false breakout, which I'm sure most of you know about. So, you know, if we don't get a break here, often these acceptance methods can stop us getting into false breakouts, okay, which you do get a lot on the FTSE 100. So I'll leave you with that trade. All you need to do is wait for it to break up, and then you can get in on a buy with your stops below 7,300. Or if you want a smaller stop, then wait for a pullback, which you may or may not get. You just never know. Okay, let's take a break from that one for the moment. Actually, the only other thing I would say as well, no, I'm not going to go into that one. I'll come back to that in a second. There was a short-term trade that I'm looking at as well, but I actually want to give this trade a little bit of room today. Again, I will take questions at the end, guys. I know, I'm sure some of you have got lots of questions that you want to ask me. All right, so this was the FTSE stat that I wanted to talk to you about. And we were giving some examples of market function trades. Remember, we've got these 9 high probability blueprint trades that set up. We don't trade every day, guys. We're looking for very high probability trades, as you probably guessed. I'm not interested in getting in with all the noise that's out there. And if you start talking to me about an engulfing bar or a, you know, head and shoulders pattern or something on the 1 minute chart, I'm just going to ignore you because I don't get involved with any of that mumbo jumbo. So we talked about the first trading day of a month when pension money comes in as an example of market function. We've talked about the dividend day tomorrow on the FTSE as another example. And we talked about a little bit about seasonal buying, and I've given you the stats about October low and the end of the year. Let's have a look at a market event. So this is an event called expiry, which has nothing. Well, we're not trading options here at Magnetic Trading, but this trade is indirectly linked to the options market. You don't need to know about options, but you just need to know they exist. And each month, people can take options where they think the market is going to be above or below. So they happen every month. It's the 3rd Friday of every month, and the contract will expire. So what happens is when that contract expires, it expires at 10:10 UK time every 3rd Friday, and it lasts for 5 minutes. So what's going to happen during that 5-minute window as the option expires? It has a spillover into the FTSE 100 cash market. So the general market that we're trading each day, that option will spill over. And you'll see some usually big moves on the FTSE 100 in a 5-minute window. And what we're going to do is we're going to take advantage of this, because during that 5-minute window, no buyers and sellers have been matched up. So you can see the market move up, or you can see the market move down, but it often retraces because no buyers and sellers have been matched up. And that's what we're taking advantage of. Again, let me reiterate, this has got nothing to do with technical indicators or technical analysis, nothing to do with fundamental analysis as well, which you all know about or you've seen on the internet or YouTube or whatever. This is pure market function. This is why markets exist in the first place. And this is why this trade has an over 80% win rate since we've been trading this with our clients. It's actually 7 years now. It's not 6 years. It's over 7 years we've been doing this with our clients. The beauty is it only takes 10 minutes to trade. And you know it's at a set time each month. So you know every 3rd Friday, you've got to come back to your screen for 10 minutes and trade this. I'm sure even the most busy individual in the world can free up 10 minutes when they've got a whole month to plan their schedule to free up 10 minutes. It's also recession proof because, as I said, if the market moves up or down, it doesn't really matter. We can buy or sell on this. It's a great side income for you. You know, it can pay some of your bills and give you entertainment money, or you can strap it on to your existing trading strategies. And there's really no guessing where the market's direction is. You just follow the market. Because as I said, we're just following the market and we expect it to come back and fulfill market function, which is matching up buyers and sellers. So let's look at some examples of this. It's very simple, guys. This is in August. So this is 10:10. And we can see the open was 72.58. The market moves down in the 5-minute window, and then it totally retraces back up again. Now, the system, I can't give you the exact system rules because it's proprietary, but we do have a specific time to get in. We have a specific stop, which varies, and a specific target. But the trade has over 88% win rate. So it's an incredibly high win rate. And I think you'll agree, there's not many things in life that give you such a great win rate. So that was August. September, Again, for this one, the expiry pushed the market down. It retraces up again. October, it didn't actually set up. So there was no trade last month, but we have the trade on Friday because we've got November expiry coming out, which is the third Friday of the calendar month. So this was some money made in August, just under $1,000. This was some money made in September, just under $2,500. And again, this was all done in 5-10 minutes, and really not much time needed, and very, very simple to do. So this is really lifestyle trading, guys. And when I say lifestyle trading, I'm not talking about getting into a Ferrari and going around and throwing your money around. I'm talking about making money in a quite relaxed manner, which frees up your time, means that you can actually action the trade. There's so many people out there where you can follow them or you can learn their strategy, but it means hours at the screen. And people just don't have hours to devote to the trading screens. And they probably don't want to do that either. I mean, I certainly don't want to be looking at the screens all day long. So Blueprint, with these 9 high probability trades, is all about cherry picking our best lifestyle trades based on market function, high probabilities, easy to follow. And as I said, expiry is one of those trades. Most short-term traders are spinning their wheels. Here at Magnetic Trading, we're trading less, but we're making a lot more. These are just some client results. You can go on Google and put in Trustpilot. You'll see umpteen testimonials over the years about magnetic trading. But just to very quick summarize the magnetic expiry trade. It's linked to market function. It trades once a month, over 80% win rate, easy to execute and understand. We've been trading this with our clients almost a decade now, works in bull and bear markets. And the good thing about this trade as well is that the banks can't really get involved with this because there's not enough liquidity, because you've got to get in and out of the market relatively quickly. They can't put big volume in and get it out quick enough. So that's another great reason why this is a great trade for the home retail trader. So the next expiry is in Friday. It's Friday. It's the 17th of November, guys. So it's in a couple of days, and you can get involved with this one. Those of you that find expiry very, very interesting, and we've had many people join and just get this trade and are having great results. But it's a very cheap payment to get this one. It's only £1,000 or $2,000. You've got it for life. And actually, as a bonus, you get to join me in a live trading room every calendar month, where I'll hold your hand and trade it live with you, just like this. We'll look at the screens, and I'll tell you where to put the stops, where to come out, etc. Of course, you'll get all the proprietary rules, but some people, well, a lot of people like to have me in the background supporting them. Gives them a lot more confidence. So you can get involved with this one. I'll put the link in shortly. Also, look out for the Black Friday offers, which are coming up very shortly in the next few days. If you actually buy the expiry trade, you'll get our new DAX first of the month trade as well, absolutely free. Or if you buy the DAX first of the month trade, you'll get expiry free. So that's a Black Friday offer. And we're also opening up Blueprint for just 4,000 Australian dollars for a whole year, which is phenomenally cheap for what you're getting. So those Black Friday offers will hit your email or Telegram over the next few days. So do look out for that. All right, let's go back to the markets. Let's just see what's unfolding at the moment on the FTSE 100. And then we can see we haven't had acceptance yet. So let's just bring that up. So no reason to buy at the moment, guys. So you can see we've had this big candlestick that rose up, but it hasn't broken. So again, you could say this is a false breakout on the FTSE 100. I'm still bullish on the FTSE for sure, but I want to see this candlestick break. So, well, this trade is really valid all day to get in if we break above these highs. The other thing as well you can look at is if the market moves down towards 73.60, that is also an area where I'm looking to buy the FTSE. And again, I'd have my stop below 7,300. But of course, the benefit there is it's a lot lower down. There's an unfilled gap down there, which I want to get involved with if it gets filled. So do make a note of those levels. It's either breaking today's highs, or if we drift down towards 73.60, I'll be looking to buy down there with stops below 7,300. Now, this will be interesting as well. The action here is, it's broken. It's broken down below 74.10. Was this also just a false breakout? Are we just going to test this and continue lower, or are we going to start getting some moves and traction back above 74.10 and move on up? Those of you maybe that are seasoned traders, you might be able to look at this 74.10 level and get a lower risk trade on by using that as a reason to buy or not buy, which may be the case. Right, let me just put that link in for the expiry program for you, so you've got it. Let me know if you want to get involved with expiry on Friday as well. And I can answer any questions on that as well for you guys. All right, the link is in there now for expiry. You can basically get involved by clicking that. And yeah, you'll be joining it live on Friday. And of course, it's every other month as well. You'll be basically trading this for life. Every month you can have that trade to take advantage of and make some nice side income. Let's just look at some questions. Does the link work on Apple platforms? Should do. Yeah. Michael just took a spike trade. Okay, good stuff. I wasn't looking at the spike today. Open, yeah, it wouldn't have been quite high enough for me, but I guess it was into a bit of resistance, Michael. So well done on that one. All right, so has anyone got any questions on market function or the liquidity grabs, or if you're struggling with trading, let me know. Maybe let me know what type of trading you're doing. Are you new to trading? Certainly the expiry trade is a great way to get involved with trading if you're new, and it's simple to follow and make some side income. And then if you want to progress and get hold of the whole blueprint, you can do that at a later stage. You can also use the payment for the expiry to deduct it against the full price of blueprint should you want to join in the future. Right, guys, so I'm going to open up any questions. Let me just see. Yeah, it's going to be Friday. That it is expiry. Rory's saying my swap is 1.6 on FTSE if I hold till New Year's. Well, what I would recommend, Rory, is getting a futures contract. So I would actually get a January, not a December contract, but get a January futures contract, and then you don't have to pay any swap fees or overnight financing charges. So look at the January futures contract. That's the best way of buying the FTSE. Richard's saying, hi, Mark, expiry trade is historically better than 80% success rate. On average, how often in the year does the trade actually get set up? I would say 10 months of the year it's setting up. You'll get a couple of months that it doesn't set up. But as I said, October is the first time we haven't had a trade for a long time. So so yeah, generally it's going to set up, Richard. And what you can do is you can start off small stakes and progressively increase your stake as you get more confidence in this particular trade. So it's one of them where we see a lot of clients, they come involved with it. They realize it's got a high win rate. They like it. They understand the reasons behind it. And then they can start increasing the volume per trade. And obviously, if you increase the volume, you make a lot more money on the trade. So that's the way I would do it. But start off small to begin with, so you get used to doing the trade. So has anyone got questions on the trades that we're looking today on the FTSE? You're all quite quiet today. Quite a lot of you in the room. So again, you've got me for about another 10 minutes. So if you want to ask anything, please go ahead. Now is your chance before we close off the webinar. So I'll leave the question box open for now. Can you backtest using TradingView? That is a good question, which I don't actually know yet. But yeah, I would just maybe reach out to TradingView and see if they will allow that. I'm not sure. Right, let's just look at the markets again to see what's going on. Yeah, you see 74.10 here, guys. This work. I mean, let's just show you on a 1 minute chart, just show you the price action. Quite interesting. So look, you can see how the FTSE is just respecting this very interesting key level at 74.10. Just a false break below it, now back above it. Yeah, as I said, if it breaks up here, I'm nice and bullish on FTSE for sure. Interesting enough as well, those of you that know the 5 minute bar strategy, well, it would also be, if you did get long above here, then it would actually be a reversal trade. So you could also get long above here and just put your stop below 74.10 if you wanted a very small stop as well. But this is moving. Now it's back above 74.10, so it's looking pretty good at the moment. Do I take a break at the 5 minute bar open every day? No, I do not. It's basically a very basic system to get into the market, John. And you'll notice today that I'm only using it to confirm getting into the market. It's just to confirm getting in, but I'm not using a stop below the 5 minute bar today. As I said, I've recommended that you have a bigger stop for today because we've got the dividend tomorrow and we're running into seasonally a very bullish time of the year, so it makes sense to have a stop below 7,300. Tammy's saying, is the futures expiry of January important in forecasting the FTSE 100? Right, the reason I'm not recommending the December, actually, it's a question for you guys. Why do you think I would not be recommending a December futures contract on the FTSE 100, given the information I just gave you about expiry? So futures and expiry, they expire on the same day, which is the third Friday of each month. So why do you think we should not get a December contract? Anyone? Why do you think we shouldn't get a December contract? Any thoughts on that? Yeah, Cassandra's got it. Because the contract will expire on the third Friday, guys, which isn't the end of the year. We want to be holding this trade until the end of the year. And actually, the last 2 weeks of the year can be where you get a lot of buy volume. We actually have another market function trade. It's called the Christmas Rally. You're probably seeing Cameron making some phenomenal money. I think he made about 40,000 pounds on this one last year. But it's the Christmas Rally trade. Again, if you're part of Blueprint, we'll do that with you. But that can be an amazing time to make easy money as well out of the market. But we do want to be in the market for that period of time. We don't want our contracts to expire before the end of the year. So that's why you've got to get a January contract. Andy's saying rebuy cost. Not sure what you mean. You might need to expand on that one. Rory's saying monthly up, weekly, daily, 4-hour downtrend. Will it go lower and rebound? Interesting. Think I might wait for a retest. Hope I don't miss out. I mean, that's the thing. If you're just looking, if you're just waiting for the trend to change, sometimes you miss the boat. And actually, most people are doing that type of thought process. So again, with all your trading, you've got to do things quite differently, guys, if you want to make money, because that's how most people are thinking. And if you think like most people, then you'll end up losing money, or you're going to miss the boat. A lot of people, they get into the thought process that, oh, the market's moved up, I have to buy the pullback. Whereas it really should be, well, if the market's moving up, it's bullish, I need to buy it. I need to buy it. If there's higher prices, it means it's bullish. You need to buy it. And these pullbacks, often, if it is a big breakout move, they don't come in, or they don't come into the levels where you expect it to. Is this being recorded and available for review? Yes, it is. It is, Trish. Yeah, for sure. It is indeed. Yeah. If you want to get involved with the expiry, on Friday, I'll be trading it live with you. The expectation is we're going to make money because it's got an over 88% win rate. We'll be trading that live with you. And yeah, if you get involved, you'll trade that every month with me on that event. Are all my levels official cash market? Yes, I do not take any levels from a broker chart, Wayne. I only use a FTSE 100 cash market chart for my levels. All right, looks like everyone has asked their questions. So it's been an absolute pleasure talking to you. I wish you every luck with your trading. And some of you are already joining up for the expiry or the blueprint. So we look forward to working with you over the next year. As I said, the last 6 weeks of the year can be particularly interesting. Lots of money to be made. So hopefully, yeah, if you join us, we'll be giving you some extra Christmas money to enjoy. Have a great day, guys, and a great evening. And yeah, I'll be speaking to many of you on the Telegram channel very shortly. Thank you.